Welcome to the Three Questions webcast series. I'm Wayne Baxter, Executive Director with One Capital Management. At One Capital Management, we develop and implement strategies that enable our clients to grow, protect, and ultimately distribute their wealth. And we do that by offering investment wealth management services. Thank you for taking time to check us out today. My clients are often referred to as cross-border clients. Now, why is that? It's because they're either U.S. or Canadian residents who wish to invest in U.S. and or Canadian dollar denominated securities like stocks, bonds, and ETFs. Our process for advising our clients includes an in-depth discovery and diagnostic analysis of their wealth management goals and objectives. And for Canadians looking to the United States, cross-border tax planning will be a primary focus. On today's Three Questions webcast, we'll be reviewing the 3 questions Canadians should ask about investing before relocating to the United States. Joining me today is Marc Gedeon. Marc is with Gedeon Law and CPA. Marc and his team specialize in cross-border taxation matters with an emphasis on tax preparation and planning for clients who work, invest, and conduct business in the United States and Canada. Marc and I go back quite a ways. We worked together on advising cross-border clients in the United States and Canada for many years. Marc and his team can handle all facets of cross-border tax filings, and this allows his clients to realize cost savings and communication efficiency. Hi, Marc. Thank you for taking time to join us today. Great to have you join us.
Thank you for having me.
Great to see you. You know, like I said, we go back a long ways, and we talk about a lot of things, right? We probably argue about the Maple Leafs more than anything, truth be known, behind the scenes, behind the curtain. But one thing that we might not agree on everything, but one thing we do agree on is the importance of having a well thought out cross-border tax strategy in advance of declaring residency here in the United States. So before we get to our 3 questions, perhaps you could share your thoughts at a high level, at least, as to why it's so important to have a strategy in place.
Yeah, that's a good question. Well, first of all, it's an important event in somebody's life when they move from one country to the other. And taxes are one of those things that can be very painful financially if not handled correctly. So I would say that's, the main reason you want to have a good cross-border plan in place is to avoid losing money and end up paying more taxes than you should, as well as, running afoul of any regulations and so forth.
And here in the U.S., as we both know, you're not only dealing with the IRS, but you're also having to deal with the state tax boards. Like, for example, here in California, you have the FTB, and they're not exactly sometimes easy to get along with. So, no,
that's true. And neither is CRA. They're actually
and the revenue agency.
Yeah, correct. They're actually a lot more of a nuisance, I would say, than sometimes the IRS or the franchise tax board.
Duly noted. Okay, I know, Marc, you're on a short schedule, so let's get right to these 3 questions Canadians should ask about investing before they relocate here to the U.S. And I think we have 3 really good ones, and we're going to start with the first one, which is, which investments, we'll use examples here, are RSPs, registered retirement savings plans, registered retirement income funds, registered education savings plans, tax-free savings accounts, some people call them TFSAs, and then your individual or joint investment accounts. Which of these should you keep or should I keep in Canada and should be transferred to the US? So simply put, which of my investment accounts that I currently have should stay in Canada and which one should come to the US, or at least the money should come to the US?
Yeah, that's a $1 million question. It's one of the,
and sometimes literally.
Yes, correct. And it's one of the more popular questions, we're asked by clients when we start working with them. Generally RSPs are fine to keep in Canada. TFSAs, however, we generally try to work with clients to collapse them before they move. Worst case scenario, we do keep them in Canada, but it's usually to the client's advantage to collapse them. RESPs have improved in terms of U.S. regulations related to these accounts in the last few years. Nevertheless, we still try to work with the client to see if it's possible to transfer the account let's say a grandparent or somebody else, or potentially close the account, pay the grant back, so forth. But generally speaking, knowing what accounts to keep and how to properly manage them once you leave Canada, that is probably one of the more important issues you're going to face when you move from Canada to the US.
And that would specifically apply to the non-registered or individual or joint investment accounts.
Yes, those are the trickiest of the bunch, correct?
Okay, so just as sort of an addendum to that question, does your opinion change at all if a person was only relocating to the United States for, say, less than 5 years?
Yeah, so that depends, and a lot of times when we work with clients, they don't have a crystal ball, and neither do we, as far as what their life situation is going to be like after they move to the US. We kind of like to work within a 2-year time horizon to determine a client's tax residency. Generally, if you're going to be in the United States for 5 years or more, we're probably taking the position that you are going to depart Canada. You will be a US resident, and so therefore we would want to manage your investments properly from a cross-border tax approach that is going to avoid complications in both the US and Canada.
All right. So the second question we're going to ask, another, of course, tax question is this: will I have to file tax returns in both the United States and Canada, even though I am a US resident?
If you if you give up your residency in Canada, chances are you're probably no longer going to need to file Canadian returns unless you continue to own a Canadian rental property, or in some cases you worked for a Canadian company where you had unvested or RS restricted stock units, or some type of even vacation pay. Sometimes we run into clients that will get vacation pays or after they've departed. So generally speaking, you're less likely to need to file Canadian returns, especially if your investments are managed correctly. Okay. You will not need to worry about filing Canadian returns or dealing with the CRA, really, for that matter, after you depart Canada. That is very, very key, because what happens is a lot of clients who don't, in advance of their move, properly plan out their investment management end up in a situation where they are still reporting income in Canada. And it's even income is as simple as interest income from GICs. And lately, that's actually been leading to the CRA to send letters to these departed residents to say, we want you to file a return and pay tax on this income, which, if their investments were managed correctly, they would not need to be paying tax on this income, because as a non-resident of Canada, you don't pay Canadian tax on interest income earned in a GIC or bank account. So I guess to go back to your question, it's unlikely you're going to need to file a Canadian return unless you've got some unique circumstances, such as employment income. Possibly you're self-employed, you still run a business in Canada, or like I said, you have income that straggles in after you've departed.
And the key part about the real estate you pointed out earlier is, as far as the tax returns going forward, is the fact that the property would be a rental property. So in other words, if you decided to keep the family cottage, if you will, you sell your principal residence, you moved here to California or wherever, anywhere in the US, and keep like a cottage that you're just using for yourself, that's not generating any income, that wouldn't require you to prepare a Canadian return just because you own that property.
Correct. Yeah, correct. Maintaining a vacation home that's not rented will not require any Canadian filings, unless you live in BC, and then there's other issues involving properties that are not being rented and so forth. But that's a whole other can of worms.
Another can of worms. I know another one that we've dealt with in the past is dealing with where we've had clients move to the US and they have allowed their parents to move into the property and the parents take over the mortgage payments. And there was some concerns there. And I don't know if you maybe want to enlighten on that, whether or not that suggests potential tax complications, either in the US or Canada.
Well, yeah, there could definitely be complications in the US and Canada. And I'll tell you, one of the key facts that you want to deal with when you're properly planning a departure from Canada is, if you do own a home, is to show that it is being rented, preferably to a third party, for at least 6 months. This helps solidify your position that you are not a resident of Canada, because the last thing you want to do is move to the US and still have Canadian government consider you to be a Canadian resident, pay tax there. So, when you have a situation where you have non-arm's length party living on the property and renting it from you, it creates complications from both the US tax standpoint in terms of imputed income, as well as on the Canadian side as well. So it's something, it's not to say you can't do it, but if you do it, you definitely want to work with someone like us to properly analyze it and put the right plan in place to report it on the US and Canadian side.
I think what we just demonstrated here without even trying is the complexity of cross-border tax planning, Marc. Very creatively. Okay, so we have one more question we want to get to here before we wrap up. And this is going to go back to the investment discussion we had earlier. What are the tax implications should I decide to keep all of my investments, and I'm thinking specifically of TFSA and non-registered investments in Canada? I decide for whatever reasons, they don't have the benefit of working, say, with One Capital. We're one of the unique things about our firm is that we're able to manage Canadian dollar investments here in the US, which is quite unique, and be able to manage them properly. Let's say the person doesn't have that ability, or they want to self-manage everything and keep everything in Canada. What is the tax implications they could be subjecting themselves to unknowingly, as usually the case, by saying, you know what, I'm keeping everything in Canada, I'm keeping everything in Canadian dollars. I don't want to bring my money to the US and set up a brokerage account here at one of the custodians here.
Yeah, so that is like one of the biggest nightmares we deal with when it comes to working with clients, is clients who don't have a proper financial advisor, such as your firm, and the right custodian. And
they're do-it-yourselfers. I'd like to chime in on that one as well.
Yeah,
so it's often the case, right?
Always the case. And problem is, clients are running into issues where their broker is restricting their account, locking it down, preventing them from doing any buys. That's become a lot more common nowadays, to have your account locked down. The other issue is the tax efficiencies. And a lot of the times, if your accounts are not configured correctly based on your tax residency, you end up overpaying, whether it be on regular ordinary taxes and also withholding taxes to the Canadian government. And so I call that basically tax leakage, where you end up paying money out of your pocket and there's nothing you can do about it. Not when you go to file your returns, there's no tricks you can really pull to be able to minimize the impact of this sort of issues. So it has to be done right from the get-go, on the back end, when it comes to the investment manager and the custodian. Otherwise, once that income's been reported to either the IRS or to the CRA, it's hard to really go back at that point to correct it. So those are two issues that happen when you have a situation where your account is not properly configured for your residency in one country and your assets are in the other country. Also, from a tax reporting standpoint, one of the other problems we run into is there are not hardly any custodians really on the Canadian side that can give you accurate tax reports in order to be able to prepare, for example, a US tax return. So you are living in America, you've been in America for, let's say, 5 years, you've got investments that you're managing in Canada. Well, sadly, Canadian institutions are not able to properly report the activity from your accounts in a format that you're going to be able to use on your US tax return. The laws are different, their systems are different. So, that is a headache all on its own, and something, again, if it's not done correctly, the way things are reported are going to lead to clients overpaying on their taxes just because of how their investments are being handled.
And I'll bring up one other thing that you and I have actually encountered is, unfortunately, a lot of times what happens is that these things don't go detected for years. And so, I think one of our classic cases that we worked on, we've seen a case where it was literally decades where the person was misreporting their income on their investments to the IRS, well-intentioned. So this is something like, I think the key point that you made was getting it right from the get-go and having a professional advisor that you work with in advance, because once the toothpaste is out of the toothpaste container, it's hard to put it back in, man. It's
a good analogy. Yeah.
Well, you know what, Marc, I really want to thank you for taking part here. We've included on our webcast here your contact information. That said, for someone who is looking out, trying to reach out to you, looking for your help, looking for your advice, looking for some assistance, what's the best way for them to reach out to you? Is it by phone, by email? Like, how would you recommend they try to contact you?
Sure. Well, you can visit our website. It's GedeonLawCPA.com. And I'll spell that because a lot of people
actually, we'll have it on the screen for you here. So you don't even have to.
All right. So you can go to our website. There's a link there. You can, if you need help, if you want a consultation, we're available we prefer to work with clients in advance, like, months in advance, really, of their departure from Canada, or even, the best time is, for example, if you've been approached about a job offer in the US, or you've got a green card, for example. Like the other day, I just had a client who recently got a visa stamp to come to the US and activate a green card. And he wanted to come to visit his granddaughter for her birthday, because his son and his grandchild live in the US. But luckily he called us, and my advice to him was, you're not ready to activate that green card yet. And he actually had a ticket and he was ready to go. And as a result of our conversation or consultation, we explained the risks to him of actually going into the US, trying to cross the border, having your green card activated, and then becoming a US resident, while he still had a lot of complexities on the Canadian side in order to extricate himself from the Canadian tax system. So, you go to our website, we can book a consultation, our phone number, email address, everything is on that website.
Marc, again, I want to thank you as always. We've worked together for quite a few years, and I look forward to keeping that relationship going. Very valuable. And thanks a lot for making time for us. I really appreciate it.
Thank you for having me.
That's Marc Gedeon, my cross-border tax guru, as I like to call him. I look forward to bringing you the 3 Questions webcast, and I hope you find them educational and informative. Please consider liking this video and subscribing to our YouTube channel. And to receive a notification when our next webcast will be posted, please click on the notifications bell. Lastly, to schedule an online Zoom consultation with me to discuss your wealth management needs, please click on the link in the description box below. You'll notice that there'll be a website link, onecapital.com/meet with Wayne. Thank you, and we'll see you soon.